Hey everyone, how's it going? John Patrick Mullin, JPM, CEO and co-founder of Mantra. Today, as I mentioned, we're going to be talking about why does real-world assets need a purpose-built Layer 1 solution. So first off, I actually have a question for you guys. Who here has heard of the term RWA? Show of hands? OK, a few people. Who likes the term RWA? Because I think it actually sucks. Real-world assets is not a good term. And TradFi, RWA means risk-weighted asset, right? So we need to find a new moniker for this. But we're stuck with it for today. The second question I have is, who has heard of Mantra before? A few. OK, I know you guys work with us, so I know you guys know. So who has heard of the token OHM? Does anyone hold OHM in the audience? A few? OK, hopefully a few more after this. I heard at the last stage over there that Arthur Hayes said that you needed to short the hell out of all RWA tokens. So we're going to try to misspell, take that and say that's not really what we're trying to do here, and there's a few reasons why. So we believe fully that existing chains cannot support RWAs. Raul Paul has said there's no point in pushing tokenization of all assets when we don't even have a blockchain that can support it. And there's a few reasons for that. One is lack of specialization. You know, most of these general purpose chains support DeFi, they support metaverse, they support gaming, but they're not really meant for regulated asset classes like real-world assets. And as I mentioned, there's no general purpose focus on compliance. There's a lack of control of real-world assets, and an example of this could be if you have tokenized a house, and then your MetaMask gets hacked or phished, and you lose access to those keys, do you actually lose the house? That would be kind of ridiculous, right? You're homeless because your MetaMask account got phished. Absolutely not. So you need to have some sort of control over these real-world asset tokens. And then, of course, then the lack of purpose-built solutions. So that's what Mantra is trying to do. We are RWA specialized. We'd like to say that we're building for a niche, which is a $16 trillion niche for real-world assets specifically. We are focused on asset tokenization, and we've built a technical solution to support this. We're building it for compliance first. We're in the process of getting licensed in different jurisdictions, and we really believe fully that it's important to abide and adhere to regulatory compliance as it pertains to real-world assets. So having an ability to understand and talk and work with regulators around the globe, it's very important that you have a chain that supports this functionality very clearly. Control, as I mentioned, is quite important. We have a sovereign Layer 1 solution so that we can, if necessary, uphold and have control over transactions with our sovereign validator set. And finally, because we are built on the Cosmos SDK, it is a modular tech stack. And I'm going to go through a few of the different custom modules that we've built around identity, compliance, and permissioning. So what are some of the core features of Mantra? The first is a decentralized identity module. And effectively what this is like a soul-bound NFT concept, where effectively you connect your identity to your wallet. I believe that in crypto, people have this idea that KYC is bad, and they don't like it. But I actually disagree that people don't like doing KYC. I think they don't like doing KYC many, many times. Because honestly, doing KYC a lot does suck. But doing it once and then being able to access different products, different platforms, is not really that bad if you can only do it one time. And that's this whole idea about a decentralized identity module. You do KYC, and it becomes passportable. It becomes passportable within an on-chain ecosystem for you to access DEXs, lending protocols, and all different types of applications from one KYC and from one wallet. We've also built an RWA tokenization module, which is this idea about token control. So effectively, what this allows us to do is have different types of smart contract functionalities built in so developers can easily issue utility tokens, security tokens, real-world asset tokens for all different types of asset classes. And we'll talk a little bit more about what that does. But it makes it very easy for both Web3 and Web2 developers to not have to worry about the compliance of their assets as they're being issued. And then finally, this idea of a compliance SDK. Effectively, this is a permissioning module that allows a customizable governance framework for developers to say who can interact with what asset, when, where, and how. Right? So what this means is when you're building on-chain applications or dApps, it's very hard to manage when you're having a totally permissionless ecosystem about who can interact with a product, who can interact with your dApp. This could mean that you have sanctioned individuals, people who are not supposed to be on your platform interacting with assets. For example, myself, I'm American. We're not really supposed to be anywhere, which kind of sucks. But you can actually create a very customizable framework that says, OK, no Americans, no narco traffickers, but we're allowed to have, hopefully all these people in the audience on the platform. That could be the rules that you create. We believe, actually not only we, I think a lot of people believe that real-world assets are a multi-trillion-dollar opportunity. BCG has said that by 2030, they forecast up to $16 trillion of assets will be tokenized. If you're looking at today's market, right now we have roughly, I think, 2 billion of tokenized treasury products on permissionless blockchains. That's a drop in the ocean, right? We're not even really scratching the surface of the potential of this opportunity and the potential of this industry. We believe that basically any type of asset can be tokenized. That doesn't necessarily mean that every asset should be tokenized, right? At the end of the day, you have to think about what is the value add, both for the issuer as well as for the end user. So we're looking at this across any different types of asset verticals: real estate, commodities, debt, art, whiskey, watches, any type of thing, funds. That being said, we are heavily focused on 3 verticals where we're seeing the most traction. One would be real estate. We're doing some really interesting stuff, particularly in Dubai, for real estate tokenization projects there. Another one would be funds and more financial products, so private equity, private credit, money markets, these type of products. And then the third one that we're really excited about is also IP, so IP and content, whether that's tokenizing royalties or cash flows from your favorite artist, your favorite football team or basketball team. These are interesting ways that you can actually engage with your fans via IP tokenization, not just at a utility level, but at a financial level. So we believe Mantra is the home for RWAs. We're launching our mainnet next month, which we're very, very excited about. And we want to be the ledger of record for RWAs. I think it's incredibly important when we're talking about real-world assets. You're establishing a trusted point. We call it a Schelling point for real-world assets to come on-chain, so you know that the provenance is real and the provenance is true. But we're not just building a layer 1 solution. We're also building a whole encompassing ecosystem. So it's incredibly important to not just focus on the actual technical components of real-world assets, but actually the distribution. Because frankly speaking, creating a token and calling it an RWA is quite easy. And frankly, that's really kind of bullshit. What we need to do is actually work on distribution of these assets, creating secondary market liquidity. Back in 2018, 2019, RWAs were called STOs, right? It was just a different flavor. But that didn't really take off, and it didn't take off for a number of reasons. There was no access to retail, there was no secondary market liquidity, and really there was no ecosystem around these products. So it's really important for us to actually have a licensed secondary market venue for these things to be able to trade on, and that's Omega. So Omega is a DEX as well as a central limit order book exchange, fully self-custodial for real-world assets, as well as crypto assets. We're getting a license, or in the process of getting licensed by VARA, which is the Virtual Asset Regulatory Authority in Dubai, which will allow us to help facilitate secondary market liquidity of these assets. And this really is a very big, important part of real-world assets, because without secondary market liquidity, without trading venues, there really is no reason to just bring these assets on-chain. We're seeing real-world assets in 3 phases. The first phase is supply side, so bringing all these different products on-chain, ideally very high-quality ones. Phase 2 is the secondary market liquidity idea. Where do these things trade? How do you buy them on the secondary market? Is there any liquidity for them? And then phase 3 is more about composability. Composability is how do you use them in DeFi? How do you use these things cross-chain? Can you use them as margin and collateral? Other types of things. This is a multi-year journey, but we believe that we're positioned to be at the forefront of that. And we do have a significant ability to source very high-quality RWAs. We're partnered with Ondo Finance, which is one of the other major RWA projects, for their tokenized treasury product, USDY. Currently, there's a Vault product live on our website that you can check out if you're interested in getting exposure to US Treasuries, Ondo tokens, as well as Ohm. Some of these other deals that we're working on include MAG. MAG is a multi-billion-dollar real estate conglomerate in the UAE, in Dubai. We're tokenizing $500 million of real estate for an off-plan real estate development, where you can participate both in the financing of this development and then actually transition your investment into the equity ownership at a discounted rate. Novus Aviation Capital is a very interesting one. We're actually tokenizing the fund that facilitates aircraft financing and leasing, including Boeings and Airbuses, 2 major aircraft airlines such as Singapore Airlines, Emirates, Etihad, etc. So we have a massive ecosystem. Mantra's been around for 4 years. I think many people in the audience have hopefully heard of us. But we're building an ecosystem across dApps, validators, centralized exchanges, and obviously really happy to have a number of really strong institutional investors on board, including Sharuk Partners, which is a Middle Eastern fund backed by 9 of the world's largest sovereign wealth funds in the world, Laser Digital, and others. We have a very strong community. We've launched 3 testnets already, actually. So the second testnet, which is called Hongbai, had over 5 million participants. We launched that back in April at the other token 2049 in Dubai. And we more recently launched the Dukong testnet. So you can see Why we're calling it Hongbai and Dukong, it's because of our presence and focus on the Middle East and Asia. I'm normally based in Hong Kong, but we have a very large presence in Dubai, hence Hongbai and Dukong. So as I mentioned before, we do have this chakra pool, which is effectively this vault product where you can participate and earn yield from US Treasuries, which is effectively the risk-free rate of the US government, currently around 5%. Additionally, you can incentivize in Ondo tokens as well as Ohm tokens. And I think, not financial advice, always do your own research, but last I checked, I think it had a roughly 500% APY. So check it out and figure out if you want to participate or not. Effectively, what happens is when you participate, you can participate on Ethereum or Base. You invest, and then you'll get USDY tokens on mainnet next month, as well as the additional rewards. So as I mentioned, mainnet is coming next month, which is October. We're calling it Ohmtober. This is basically the month that we're going all out for a number of different initiatives. Mainnet is just the foundation. So really, it's important that for us, the mainnet is the first step in actually bringing real-world assets to the masses. And you need a foundational layer 1 that supports both at the technical level as well as the secondary market distribution level for real-world assets to actually become a thing. You know, we've all had this promise and this idea that RWAs and real-world assets are going to change the world. And we do believe that in time, the amount of tokenized assets on-chain will actually surpass the whole entire crypto market, which is, I think, $2 trillion or so today. But if you think about it, real estate, equity, debt, these are multi-trillion-dollar asset classes, and eventually they are going to be living on-chain. Today, in the permissionless retail environment, we really haven't had that much traction. I could argue that at the institutional level, JP Morgan, for example, they've done over $1 trillion of tokenized asset transfers on their permissioned blockchain Onyx. But the world needs a layer 1 solution that is permissionless and accessible to all of us. Because we are not ever going to participate on the JP Morgan Onyx blockchain, but hopefully you can participate on Mantra. So hopefully you learned a little bit about RWAs today. If you have any more questions, you can check us out on our website, mantrachain.io, and hopefully we can become that layer 1 solution for you to build any of your real-world asset use cases tomorrow. So thank you very much for your time, and if you have any questions, we'll be over there. Thank you.